Do you know the difference between an LLC that actually protects your assets and the ones that are just paperwork? After analyzing hundreds, maybe thousands of business formations across all 50 states, I'll show you exactly how to set up your LLC correctly the first time. I'll break down the complete 7-step process and reveal the critical error that over half of DIY business owners make that could make their LLC worthless. Before we dive into the how-to steps, there's something critical most YouTube videos about LLCs never mention. And why does it matter? We're talking about protection of personal assets from business liabilities, right? Because we don't want something that happens in a business, especially a small business, to affect that of your personal assets. So we want to keep everything separate from your personal side, from your business side, right? But we also want to maintain the tax flexibility and the flow-through taxation, the pass-through taxation that allows us to not have to file a ton of tax returns for all of our business activities and ventures, right? Think about it. If you own 10, 12 rental properties or businesses, you don't want to have to file multiple tax returns for all those because you're talking about increased tax compliance costs. You're talking about having to file additional returns and more fees and just overall more things that can go wrong with your life and your business. Also think about the professional appearance that it makes to your clients and your partners. Do you want to be operating under your personal name or do you want to be operating under an LLC with an EIN number? Something that has legit authority and establishment that can prove your credibility in the field of real estate or in the field of business. An LLC creates a legal separation between you and your business, but only if you set it up correctly. The process itself seems simple, but there's one step where 68% of DIY business owners make a critical error. So let's talk about how to implement it. So step number one, you're going to figure out what do you want your LLC to be named, and you want to check its availability, right? So you're going to go on your Secretary of State website, you're going to look up the LLC name and check its availability. At this point, you also might want to select your registered agent to represent you and create the separance between personal and business. There's companies out there that can act as your registered agent. You can look them up online. They normally only cost $40 or $50. You're going to file your articles of organization or incorporation with the Secretary of State. This is something you can do personally on the Secretary of State website. It's going to be very important that even if you're a single member LLC, you want to create an operating agreement, okay? Even if you're a single member LLC, you should still have an operating agreement because nowadays most banks, most businesses, most closing attorneys, most title companies are going to want to see an operating agreement. This is especially important if you're doing business with other people. You should never ever form a multi-member LLC without first having an operating agreement in place. An operating agreement is going to establish, what happens when things go well, what happens when things go bad, more importantly, and what happens if people want out. What if you're 3 years into the business and one of your partners wants out? Is there a buyout clause? Is there a provision that says that they can be bought out at whatever the fair market value of their stake is? Or is there no clause in general? The only ship that doesn't sail is a partnership. Somebody told me that a long time ago. And so it's very important that you have all these things lined out step by step in an operating agreement before you go into business or before you buy a rental property with somebody. Or even worse, what happens if a partner gets divorced? Does the spouse get their share, half their share, and now you got to do business with the spouse? Do the partners have the first right of refusal to be able to buy that existing partner out of the business? All of these things have to be considered, and that's why having an operating agreement is very, very important. I remember we were reviewing an operating agreement one time for our client, and the operating agreement said it was Jim and Joe, and they owned a rental property that was worth about $1 million. Fair market value, they didn't owe anything on it, right? And in the operating agreement, it said if Joe dies, his interest goes to Jim. And it said if Jim dies, his interest goes to Joe. It didn't mention anything about Joe or Jim's families. It didn't mention anything about their kids, their wives, their descendants. It didn't mention anything about that. It simply stated if Joe dies, his interest goes to Jim, and if Jim dies, his interest goes to Joe. And upon reviewing that, because they had set this up with LegalZoom, right? They wanted to take a shortcut. They were the DIY investor making a mistake. Because of that, we were able to review the operating agreement, and we gave Jim a call. And we said, hey, Jim, per your operating agreement, it says if you pass away, all your interest goes to Joe. Is that what you want? And of course he said, no, I would like my interest to go to my family, right? And so these are the things that you have to make sure that you have in an operating agreement. Hey, real quick, if you're a real estate investor and you're looking for ways to stay competitive in today's market, I want to help you out. My team and I have worked with real estate investors to save them $10,000 to $50,000 on taxes every year, and we currently have a few spots to work one-on-one with us to build your tax strategy. Our average client saves around $18,000 a year by working with us, so if that's something you're interested in, then you can click the first link in the description for more information. Okay, now back to the video. You're going to check your LLC name, see if it's available. You want to appoint a registered agent. You're going to file that articles of organization with your Secretary of State. You're going to create an operating agreement. And then at this point, you can get an EIN from the IRS. And it's very important when you apply for this EIN number that you're selecting the right employer ID and the right name, as well as the right taxation. Because this is a mistake a lot of DIY investors make. They go on the IRS website to get an EIN and they put both their spouse's name on it when it should have only been one, right? Or they only put one when it should have been two. And this is a mistake a lot of investors make, that if they DIY, they're going to mess it up, and I want to make sure that you don't mess it up. And so by now, once you have the articles of organization, you have your operating agreement, you have your EIN, you should be able to open up a business bank account with whichever one you choose, right? And the business bank account, they're going to want the EIN, the articles of organization, and they're going to want the operating agreement. And so that's why we're doing these things step by step by step to make sure that you have the right steps and what you need to know. Lastly, you're going to want to make sure you file any initial reports or any sort of future LLC reports by your state. So a lot of times when people are filing LLCs for their properties, although they don't have a federal filing requirement, all states still have an annual fee for your LLC. Now in Illinois, ours is pretty easy. Illinois says, hey, did you make money last year? Okay, great. Sign this and pay $75. Some states are more complex than that. I'm looking at California, requires $800 for an LLC. Texas, Tennessee, New York, they make you file tax returns. So just be very careful that you don't miss these filing requirements, because then they can make your entity dissolved and then you can't do business anymore, or they can charge you taxes, penalties, and additional fees. Now that you know the basic steps, here's where things get tricky depending on your state. And why does it matter? We're talking about filing fees, processing times, annual requirements, and they vary, right? So we have these high-cost states and we have these low-cost states that I talk about, right? So a high-cost state for doing business is typically going to be like your Californias, New Yorks, New Jerseys, Tennessee, Texas. These states have the highest cost because they require annual reports, they're not super cheap, and you sometimes have to file tax returns for those. Okay. Now, some low-cost states that kind of come to mind are, Wyoming, Nevada, Delaware have good beneficial ownership interests. These are going to be some low-cost states to where you can file your LLC. This next point is what separates successful LLCs from those that get pierced in court. Maintaining your LLC properly is just as important as setting it up correctly. So here are some common mistakes. Mixing personal and business funds. That's why it's super important when you form your LLC that you don't make any expenses out of your personal account and they all come out of the business. Missing annual report filings. So remember I mentioned that LLCs, they have an annual report fee. Most LLCs are going to charge you every single year to maintain the LLC. And so you want to make sure that you don't miss any of these filings because they could dissolve your entity or put you in jeopardize you from doing business. Maintaining proper documentation. When you have 5 to 7 LLCs set up, it's very hard to keep all that together and to keep all that collective. We like to do a nice job. We roadmap out our client's entity structure so they can see it, we can see it, and everybody's on the same page. And it's very important that you maintain proper documentation. Otherwise, things get missed. Deductions get missed, tax returns get missed. That increases your filing costs. It could lead to penalties. It could lead to interest and much, much more. Operating without an operating agreement. What are you going to do when your partner wants out? That's why it's super important to have that detailed and outlined before it ever happens. Before it ever happens, you want to make sure that you have outlined and detailed what happens if a partner gets a divorce? What happens if a partner wants out? What happens if a partner gets super sick? In a case of a CPA firm, if I own a 50-50 CPA firm with somebody else and they pass away, their spouse can't just come and run the CPA firm, right? They don't have a CPA license. So there needs to be some sort of buyout provision or clause inside of that operating agreement. Another thing that a lot of people miss is updating records after changes, right? So what if you had an LLC that owned a couple properties and you sold a property or you moved a property out to an LLC? Every time you have a life event, these documents need to be updated so that way you can keep up with the times and you can, more importantly, keep up with the filing fees and the requirements that needs to happen, especially if you're doing business across multiple states. So needless to say, when you're doing this, it's great to hire a professional. While you can form an LLC yourself, here's when it makes sense to bring in an expert. Cost versus risk analysis, right? If you're going to be setting up multiple LLCs for your rentals and your business, you want to make sure that you're doing it right. And by doing it wrong can mean you're paying thousands of dollars a year in annual maintenance costs, additional filing fees, and we talked about penalties and interest. Right? So we talked about multi-member LLCs. Remember, a multi-member LLC, even if it's spouse and spouse, they still have to require them to file a partnership tax return. So if that's not something you want to do for every single one of your rental properties, it's very important that you set up your tax structure from a great perspective in order to not have to file those every single year. We're talking about foreign and non-resident owners. If you own an LLC with someone that's from out of the country, those require additional complexities, right? Industry regulations. So if you're a doctor, a lawyer, an accountant, physical therapist, a nurse, a lot of these industries require you to have a PLLC, which is a professional limited liability company, instead of just an LLC. I remember when I formed my first LLC, I made this mistake. I formed a regular LLC, and it wasn't about 30 days later that I got a letter from the accounting board that said, no, you have to be a PLLC. So in your legal name, it has to say PLLC instead of LLC. So then I had to go change everything. I had to change my EIN, change my bank account. I had to change my annual report. And had I just done it the right way from the start, I wouldn't have had to untangle everything. It's a lot easier to set things up from the beginning the right way, using expert guidance, than trying to set everything up yourself and then doing it the wrong way. It is like having your shoes tied together in a knot before you go to start a race. And you want to make sure that your shoes are tied the right way before you start the race. So while it may seem cheap to just go on LegalZoom and form a cheap LLC, it can cost you tens of thousands of dollars in the future, when if you would have just used professional services, like hiring a lawyer, an asset protection person, a CPA to look over everything, it would make it a lot easier for you to do it right the first time than to get it wrong in the future. And over time, this can be tens of thousands of dollars that you're leaving on the table, or you have to pay in the future by not having it set up the right way. So you have to know when are things that you can DIY yourself and when things you should go to a professional for. Anytime you're having an LLC that has somebody else that is not your spouse, you should go to a professional. If we're just talking about setting up a simple single member LLC for one of your rental properties, maybe you can get away with DIYing. But some of these bigger ticket items, if you're owning LLCs, especially LLCs out of state with other people, you're going to want to have professional service and have that help. Hey, if you like this video, you'll definitely like this one. Click that button and I'll see you over there.